Everybody, welcome back to the channel. Welcome to the channel. If it's your first time checking us out. Hey, today we're going to hit up a topic that a lot of clients or potential clients have reached out to us about, and just kind of confusion of the process, kind of logistically and timeline wise, as to when you get ready to finance, when you get ready to build that custom home, how you time up the financing of it. So we've talked a little bit about in the past about, different ways you can finance and kind of how that whole land loan, construction loan process works. But a thing that seems to be just a little bit of a sticking point, and understandably so, because, building a custom home is not the least expensive thing in the world. One of the big sticking points is, when do I need the most amount? When do I need like that big pot of like 20% down for the build? And how the heck do I finance that? So I'll just say, bottom line up front, whether you have your land or you're getting ready to purchase your land, you're going to either, like I said, you either own the land already, or you're going to do a land loan, which is kind of a whole other thing. You're going to need 25% down roughly of whatever the cost of the land is if you're going to finance it. And then you're going to roll that into your construction loan. So you're basically going to pay off that land loan with the construction loan. So today we're just going to really focus on the construction loan piece of things, when you're going to need that money, how much money, and how the heck you come up with it. All right, so like I said, the biggest thing that is the sticking point is, how much money do I need down and when do I need it? So let's talk that real quick first. So number one, up front, there are special programs. Say if you're a veteran, some banks will let you do as little as 10% down, but most banks are going to require 20% down of the entire project for your construction loan. So let's use easy numbers here because I'm not good at math. Let's say your build cost is $800,000. Your land was $200,000. So your total project cost is going to be $1 million. That means when you get ready to pull that construction loan, when it's time to close on that construction loan, the bank's going to want to see $200,000 of either cash on hand or equity in the project. So if you own your land cash and it's worth $200,000, then they'll credit you that $200,000 of equity. And of course, they're going to lien the land and all that stuff to make sure the bank's protected. But if you still have a mortgage on your loan, or on your land rather, probably in this scenario we're talking about, it would be, if you bought the land with a loan, you probably put down $50,000, that 25%. So you have a financed amount of $150,000. So you've got $50,000 that you've paid out of pocket towards the project. The bank's going to count that as equity. So now we're getting ready to close on this thing, and it's like, okay, shoot, I've got $50,000 in equity that, because of my land, that I can put towards it. But that means I'm short $150,000. So there's three main ways that clients come up with that extra money. And again, you've got to have this money before you can close on the construction loan, before you can start the build process. Again, just like anything, the bank wants to make sure that you have skin in the game. There's equity built into everything before they start loaning their money, just in case everything goes south. So the number one way rather, is you just got a lot of money. So you're living in your house, you're loving life, and you got an extra $150,000 laying around. So you're like, yeah, no problem. I put $50,000 on the land loan. Now it's getting ready to do the construction loan. I'm just gonna, pay off the land, or just show the bank I have this other $150,000 that I'm gonna start using towards a project. So you can show $150,000 in extra assets, no problem. That's by far the easiest way to do it. Now, most people, this doesn't work out, because ultimately, a lot of times a custom home is going to be more than $1 million. So, if you're like that 1.5, now all of a sudden, you've got to have an extra, $100,000. So now you're at $300,000 you have to have. So to have an extra $300,000 just cash on hand doesn't happen for a lot of people. There are certainly people in that situation. So number one way, you just got a lot of money laying around, and you say, hey, I'm going to stay in my house until my new custom home is done. And for that extra down payment money I have to make, I'm just going to pay the money. Number two way that a lot of people do it is if you have a lot of equity in your current home. So if you have a lot of equity in your current home, maybe it's even paid cash, but you want to stay in the home. Most people want to stay in the home while they're doing their build, right? That's the optimal solution, is I'm going to stay in my house while I'm doing this build. And then once my new home's done, I'm going to move out and I'm going to go move into my custom home. So a home equity line of credit is a really valuable tool that works for a lot of people. So home equity line of credit just means the current house that you're in, you've got a lot of equity in it, maybe even own it cash. Say it's a $500,000 house, you own it cash, you got $500,000 in equity there. A bank will give you a line of credit where they're going to lien the property. And you can do this also if you do have a mortgage, but you have a lot of equity. So say it's a $500,000 house and you still owe $200 on it. You've got $300,000 in equity in there. So the bank will extend you a line of credit for a certain percentage of what you have. A lot of the times it's 75 to 85% loan to value. So they won't take it all the way up on that full amount of equity that you have, but they're going to take 75 to 85% of that equity. And that's how much they're going to extend you as a line of credit. So that might mean, hey, I own my current home cash. I'm going to do a line of credit against my current home, and I'm going to use that money to start my build, to show as that 20% down and start using those funds from my new custom home build. Man, that's a great situation. There's one, I won't say sticking point, but one key point is that your debt to income ratio still has to work. So in this situation, you would have to, the lender would have to make sure that you qualify. Your debt to income ratio qualifies based on the total amount of the construction loan that's going to be drawn when the house is almost done. So that full amount, so say in our scenario, it's $1 million. When $1 million is extended, whatever that interest only payment is on that, they're going to factor that in. And then they're also going to look over at your HELOC amount and say, okay, based on your HELOC payment of whatever it is, if you borrow the $200,000, maybe it's $1,000 a month, whatever the number is, they're going to look at both of those payments. And when they add those payments up, your debt to income ratio still has to work out. So if your debt to income ratio is still within acceptable tolerances, you take that home equity line of credit, you start that as the funds for your down payment towards your new custom home construction loan. You get to stay in your current home the whole time that the house is being built. And then whenever you get ready at the end of the day to refinance that construction loan into what we call a 30-year permanent fixed loan, then you basically just take that loan and you pay everything off. So you're paying your HELOC back off. You're going to pay your construction loan. You're going to transition that to a 30-year loan. A lot of times also what people will do is, if your house was worth $500,000 and you owned it cash, and then you took $200,000 of equity from it, whenever you sell your house, because you probably don't need the two houses, right? You're going to sell your existing home when your new custom home is all the way done, you're ready to move in, or maybe even wait till you get all your furniture moved over. And now you're like, hey, I'm fully in my custom home. Now I can sell my other home. You sell that home, and at that point in time, it's going to pay off that home equity line of credit with the funds from closing for your existing home. Again, the bank has put a lien on that property. So in order to sell the property, you just got to pay off all the liens. So your home equity line of credit would get paid off at closing. So that's done. You don't have to worry about that. You take the remainder profit from the sale of your existing home. You can keep that cash. You can put it towards making that permanent financing a little bit lower maybe on your new custom home. So the home equity line of credit, if your debt to income ratio still makes sense, and if you have a lot of equity in your existing home, the HELOC can be a wonderful, wonderful solution for that 20% down on the new custom home construction loan, so you can get started on that build. All right, and then the last one, and this is probably the least optimal, but let me just say, if you do this one, you're going to end up in a place like this. You can see all these RVs back here. You might end up in an RV park because you might have to sell your current home and take that equity that you have out of the home. Maybe you have a little bit of equity and you have a little bit of savings, and you can put that towards the 20% down on your custom home. So you couldn't do it with a HELOC because maybe you didn't have enough equity because of that 70 to 85% loan to value. Maybe your debt to income ratio didn't match up, like you just couldn't qualify for having both of those loans outstanding. So the only other option, and it's what a lot of people do, I would say it's what most people do, is you sell your current home, you take that equity from that property, you put it as your 20% down on your new construction loan for your new custom home. But now you're homeless because your custom home is not going to be done for probably another, at this point, you're probably, 8, 10, 12 months out. You've probably worked through a lot of design stuff now. So you're ready to start building, ready to pull that construction loan. So now you've got to have some place to stay for at least a year, let's call it. So a lot of people will go and rent, if you rent an apartment or something like that, it's not going to count against your debt to income the same. So for a lot of people, especially if they're empty nesters, we see this a lot where they're like, hey, I don't have any kids anymore. We're just going to go get a little 2-bedroom apartment. We'll put our stuff in storage for right now, or maybe we're going to sell it because we're going to get all new stuff in our new custom home. Whatever the case might be, they might just go hang out in an apartment. But if you are paying for, maybe you're going to have, if you have a family still, maybe you're going to have to be renting a house. So now that rental payment is going to get a little bit bigger. But you can definitely do that. You can definitely find a rental in your area that you're going to be able to stay in until that new custom home is done. You just got to make sure all the numbers make sense. And honestly, there's a lot of people that do this. Especially if they own acreage and it's not in like an HOA or covenant controlled area. If they've got an RV, or some people even go buy an RV, they just park the RV out there and they live in the camper. They live in the camper while the house is being built. They live on site. There's a lot of logistics that go with that. Do you have to go to the campground every so often to the dump station or whatever? I'm not super familiar with it, but go to the dump station and dump your stuff for a little bit. Do you just stay on your property until you take a vacation and then you kind of do all the camper stuff? So there's a lot of flexibility with it. Now, I think most people realize campers, at least most campers that the average person would buy, unless you're talking about like a huge motorhome, they're not necessarily meant to like live in full time with like, a wife, husband, and two kids or whatever for a year, for 12 months straight. So, you might have a lot of extra wear and tear on it. Does the camper last the whole time? There's a whole lot of caveats that go with that. But nonetheless, it could be a really great option. A lot of people do it. Like I said, especially if the land is an area where you can just park the camper out there beside you get to keep an eye on the build too, which I guess is kind of cool. So you're there at the build site every day and you're living in the camper. And then whenever the home's done, maybe you keep the camper for vacations, maybe you sell the camper. I've seen people do it both ways. So that's definitely an option. And I will say that me personally, my wife and I did almost kind of a combination of a lot of these things. So our old house, before we built the custom home that we're in right now, we actually sold to some friends of ours. So they were flexible on timing, which was cool. And we gave them a good deal. So they were happy about it. So we built most of the custom home while we were still in our other house. There was about a month period where they needed to get into the house and we didn't quite have our certificate of occupancy, or the permit paperwork, if you will, all being finalized out, so we were allowed to live in the house. And we do have a small RV, so we did that for about 3 weeks or so. Myself, my wife, and at the time our 3-year-old, I guess, probably. We just stayed in the camper, and I'd be lying to you if I said we didn't actually stay in the house a lot of the time too, because it was very livable. We just didn't have all the permits finalized. I'm not saying I recommend that though. But so we stayed in the camper for 3 or 4 weeks, and it wasn't that bad at all. Now, staying in the camper for 12 months, I don't think I would have liked that too much, but like I said, 3-4 weeks wasn't bad. So maybe it's kind of a combination of these things. Maybe it's a little bit you stay in your house as long as you can, but the timing doesn't quite work out all the way. So then you go and you stay in the camper for a little bit. So anyway, it's a confusing point for a lot of folks, and I totally understand if you've never been down this path before of when do I have to pay this money, and how do I get that much money unless I just have it, like I said, have it laying around in a bank account. There's other options too. You can cash out some investments, things like that. So just know that there's options out there. Talk with your builder and talk with your lender. They should be experts in this, of how to help people navigate these waters to get to a good solution for your specific scenario, your specific situation. And as always, no matter where you're at, if you have questions, you want to kind of pick somebody's brain about this, I do the best to respond that I possibly can to everybody. Sometimes, as you can imagine, we get pretty busy, so I'm a little bit delayed. But if you have questions about us, call, text, email, hit us up in the comments. Definitely try to get back with you. Like I said, it's a confusing piece of building a custom home when it comes to the timing and the logistics of getting that down payment money, when I need to have it, how the heck do I get it? So there's a lot of scenarios out there that can be beneficial, a lot of different ways to skin the cat, as they say. So reach out anytime. Happy to do whatever we can to help you out.